Right, let's check in with some business news. Now, Nedbank has resumed dividend payments to shareholders. It will pay out 2.2 billion rand in interim dividends. Nedbank's interim profits are up by almost 150%. It says this is mainly due to robust retail credit demand due to lower interest rates. But despite this, the bank is dropping its economic growth expectations for the country. It previously estimated a growth of 5%, but has dropped that to 4.2%. It says this is mainly due to the fallout of the coronavirus pandemic and recent riots. So let's bring in Nedbank CEO Mike Brown, who joins me now. Mike, thanks indeed for talking to us. You've resumed dividends. Headline earnings are up by nearly 150%. It does come off a low base, Mike, but you should be happy that stability with clients is beginning to emerge now.
Yeah, good afternoon. Absolutely. Last year was a very difficult period for our clients and for our business. So while we are coming off a low base, I think these results demonstrate the resilience of both Nedbank and the South African banking system. We've got all of our key balance sheet metrics around capital, liquidity, and the level of provisioning higher or stronger than they were pre-COVID. So a very resilient performance, enabling us to resume dividend payments.
Mike, are people taking up and paying back loans more regularly? What's your results saying about this?
Absolutely. Last year was clearly a very difficult year, with in the first half of the year, very strong loan take-up from our corporate clients, many of whom were building up excess liquidity to help them in a very uncertain environment, but with slower loan take-up from our retail clients during lockdown. What we've seen in the first 6 months of this year is exactly the opposite of that. Most of our corporate clients are repaying that surplus liquidity, and in particular, corporate clients in the commodity sector are benefiting from record high commodity prices, very cash generative, and paying down debts, while retail clients are taking advantage of the 300 basis points lower interest rates. So to the extent that individuals have been able to maintain their employment, they have more cash in their pockets today than they did 12 months or so ago. And we've seen that in a reduction in bad debts or impairments across all of our retail product sets.
Yeah, and then, you know, it's quite unfortunate when we pass the second half of the year, as we approach there at least, we've had those recent riots which just added to the burden of COVID-19. Nedbank didn't escape that completely. And of course, that sort of, you know, interfered with your growth forecast a little bit as you try to predict that sort of uncertainty.
You're quite right. If you look at the impact on Nedbank, we had roughly 10% of our branches damaged and just under 10% of our ATMs. So we would think that somewhere between 250 and 300 million of damage, all of which is insured through Sasria. And we've probably got around about 30 million of cash losses. But much more important than any short-term damage is the long-term damage that the riots and looting would have done, confidence in the rule of law, to the country risk premiums, and indeed to country growth rates as a consequence. So, as you correctly said, our forecast for GDP growth rates this year at one stage was as high as 5%. A lot of that bouncing back from low rates last year, but we've shaved that now to 4.2%, 0.4% as a result of the riots, and 0.4% as a result of the lockdown level 4.
Mike, I've got to ask you, I mean, you've had your fair share of investment roadshows with Treasury in the past. You would have had contact with our new Finance Minister, Enoch. He's now in charge of our fiscal health. What do you make of this appointment?
Yeah, so, certainly we think that Minister Mboweni, or Governor Mboweni, as he liked to be referred to, did a good job in an extraordinarily difficult fiscal environment. And we are in bad fiscal shape, but better fiscal shape than we thought we were going to be in. And as you correctly point out, Enoch is well known to the investment community. And I think he is a safe pair of hands to take over from Minister Mboweni.
While we're there, Mike, I mean, he seems to be having a little bit more, sort of less resistance, let's call it that, than the previous finance minister when it comes to policy, when it comes to the buy-in, perhaps, given his history with unions. He was placed there. Do you think you might get sort of an easier understanding of between business and ANC or ruling party policy with him at the helm of finance?
That would be helpful if that is the case. I think it's very early days to be able to make that conclusion, but absolutely vital is going to be to ensure that he maintains a fiscal trajectory that enables our country to effectively maintain its sovereignty.
Mike Brown, Nedbank CEO, thanks very much indeed for talking to us.